Yeah, I will be interested to see if they hit the ATM on this one, and if so, how much. And we'll find out on Monday, because I think now that it did hit 100, they did start issuing more STRC. So I think it can be very bullish news if they were able to issue a lot.
Sailor tweeted that over 1 million shares were traded on that specific day. So I think they did manage to hit the ATM, and as same as you, I would be curious to know what's the amount behind that.
Are you all in on the chair? How many chairs are you sitting on right now?
Hello, everyone, and welcome to One Chair. As a reminder, none of what you will hear is financial advice, and this podcast is for entertainment and educational purposes only. Okay, so today we have a packed agenda. We're going to go through MSTR updates, Metaplanet, STRE, and Sequans, starting with MSTR here. We thought we would go back to the earnings call and the credit rating that MSTR got in the last weeks, and what the implications are of that. So, Yves, you want to start off with the credit rating?
Yeah, so MSTR got the credit rating from S&P B-. So during Strategy's Q3 earnings, they showed a very interesting slide, which we're presenting here now. They show that there's 2.8 trillion of unrated total addressable market for unrated credit. And that's where they were before. There's a $4.9 trillion market for C to double B rated credit. And that's where they're entering now with their B- rating. So you see there's a huge amount of potential credit that's been unlocked through this rating. Whether the rating is not as we had expected, it's still a good way to progress, because now they have more access to the credit markets in general.
Yeah, exactly. I think this is the reason why it's a huge positive for Strategy to have any rating at all, right? Because being unrated, you have a lot of capital that is not allowed to invest in your products, and now they are unlocked a huge pool of capital, even though we probably disagree with the B- rating, which is way too low for the credit quality that they have, with the amount of Bitcoin on their balance sheet and low debt levels. So it should be a way higher rating, but it is a start, and it is the first Bitcoin Treasury company that gets a rating, and it already does unlock quite a bit of capital here. But also interesting to see on the slide is how much would be unlocked if their rating is increased to a triple B or higher, with 23 trillion of investment or of global corporate credit that would be unlocked at this point.
Yeah.
Okay, so moving to our next topic on Strategy and their earnings call is the big surprise, at least for me, was the fact that they wanted to expand to other geographies and offering other preferred equity in non-US dollar denominated currencies, so in euro, Canadian dollars, British pound, potentially Swiss franc was mentioned, and we did actually get the first of those products announced this week with STRE, a Euro-denominated preferred that is entering the European market. So, what are your thoughts here, Yves?
It's great to see how fast things are moving now in the Bitcoin Treasury landscape in general, but Strategy still spearheading their way through it. And with this new offering that they closed actually today, so they had an initial offering of 350 million euros. It got upsized to 620 million euros. So very nice to see, although now they're selling the STRE shares to 80 euros per share instead of the notional 100. However, I think it's a great move, because they're now, as Saylor put it in the Q3 earnings, eating the world. So they're really expanding at a very quick pace, and also tackling the right markets, because you have Europe, as they mentioned, and Canada with low yields. So it's probably the best places to start striking. Obviously, there's also Japan, but Metaplanet's already implemented there, and they're also looking to issue some preferred. So I think attacking the European markets makes sense, and especially that because of how big those markets are. Additionally, I think that they will be, and this is speculation, attacking other markets in Europe, because not all of Europe is denominated in euros. So you have, for example, the UK in GBP, so probably that's a next target, or Switzerland with very low yields denominated in Swiss francs. And if you look closely at the map that they showed in their Q3 earnings, you have, it goes all the way to the countries like in the east, like Ukraine, all the Baltic,
is on it.
even Turkey, exactly. And so all of these also have different denominations. So they're really looking to get a whole chunk, or the entirety of Europe, not just the euro-denominated countries.
Yeah, that's speculation. I don't know why they showed the map that way. Did they really think about all of those countries and their local currencies, or are they just showing Europe as a geography here? We'll find out soon enough, I think. Yeah, just one thing to add on the geography. I think you mentioned it. There's some rumors going around that Strategy has been working with the UK or UK regulators since this summer. So yeah, wouldn't surprise me to see GBP denominated preferred coming out as the next one. And Saylor has been talking an awful lot about Switzerland lately. So I think CHF is not a far reach to get one of those as well here in the next months. But back to the preferred that they did announce, STRE, Euro-Denominated, and we have some more information here on the next slide for you, also out of the STRE presentation. Again, notional value outstanding 350 million. This was bumped up to 620 million. So it does show interest in the European market for this. And I think the important thing to take away for now is that the closest preferred to it is STRF, which for me was a bit surprising. I would have thought they would come out with STRC, with products that are more related to STRC, because Saylor mentioned that STRC is their iPhone moment, and is the preferred that did have the most interest or the most volume so far in the US. And I think it's an interesting choice that they go offer a product first that is closer to STRF.
I would also expected that it would have been an STRC-like product that comes first, but maybe the STRC product is still quite novel in many ways, and I think the market needs to digest what it is. So in that sense, it's probably a good thing to start with a product like an STRF-like product, because it gives you a sort of introduction to these products without all the complexities of STRC, because STRC is in my opinion, more complex than an STRF because of all the mechanisms to keep it between $99 and the $101 targeted price.
Yeah, I think it makes sense what you're saying, that the dividend is fixed in this instrument, right? So maybe easier to wrap your head around what you get with a product like this, and as an introduction to the European market might make sense. I think another explanation may also be that it probably takes time to get a product like this out there, and they've probably been working on this for many months with the EU regulators, and being able to bring out a product like this. And by that time they didn't really know yet how well STRC would perform, right? And would it trade at par? And it just started trading within the range that they wanted to trade in. And as Soleil mentioned in our discussion with him, it might not be the best strategy to start issuing STRC-like products while your original STRC is not yet trading where you want it to be trading, right? So that's also part of it. Okay, so just to get back to the overview of STRE, it was listed on the Luxembourg Stock Exchange. The dividend type is fixed, paid quarterly. It's a cumulative dividend if for some reason at some point they do not pay it out. And the effective yield will be 10%. So it is higher than what STRF is currently trading at. It's also a perpetual preferred. And in terms of ranking, it sits between STRK and STRC. So one important thing to add is that the initial offering was done at 80 euros per share with a notional value of 100 euros. So the initial investors here are getting a nice discount and a higher yield at that with this offering. And that's probably also one of the reasons why it could be upsized to 620 million, because it's quite a good deal to get those shares at 80 cents on the dollar, basically. And from my point of view, I don't know if that's really a positive. On one hand, they were able to upsize the offering. They'll have a lot of cash now to put into Bitcoin at an attractive Bitcoin price, as we know now, around trading around 100,000. So that's the positive. The negative is that if you look at it from an MSTR shareholder's perspective, you're kind of getting diluted with this, because they are taking in money to buy Bitcoin and put on the balance sheet, but for every 80 euros that they buy Bitcoin, they have a liability or a liquidation preference on the instrument of 100 euros, right? So you are actually getting diluted as a common shareholder through this. You're putting more liability on the company than the collateral or the Bitcoin that they're able to add to their balance sheet through this offering.
No, that's a great point, and I think it's probably not so great for the common shareholder looking at it from this perspective. You could argue, on the other hand, that having an upsize is probably also good for the actual instruments to get a bit more liquidity, because suddenly you have a bigger amount of shares out there, and that obviously creates more liquidity when it trades. So you need to probably strike a balance, and I suspect that strategy made some calculations to make sure that they have the right amount out there when they issue those shares.
And again, the liquidation preference, it's in theory, it is dilutive, but again, you don't invest in MSTR if you don't believe in Bitcoin, and that Bitcoin over time will go up. And if that happens, strategy will not be forced to liquidate, and therefore this is more of a theoretical issue if Bitcoin remains strong and goes up over time.
Let's go into the next strategy update, which is we have finally reached the $100 value for STRC, and it's been floating around $100 for more or less quite a few days now.
Yeah, I will be interested to see if they hit the ATM on this one, and if so, how much, and we'll find out on Monday, because I think now that it did hit 100, they did start issuing more STRC. So I think it can be very bullish news if they were able to issue a lot, and if not, then remains to be seen how stable it can be kept in that at that price level.
Sailor tweeted that there was the day that they were trading quite well, over 1 million shares were traded on that specific day. So I think they did manage to hit the ATM, and as same as you, I would be curious to know what's the amount behind that.
I would expect that they really started doing that. And if you think back, now it's this product's been out for a bit more than 2 months, and there was probably a lot of profit taking from earlier investors. Right. Again, this STRC was also offered at a discount to the notional value, and on this one, it's even clearer because there's a clearly stated goal of the company to have it at 100, which you don't necessarily have on the other preferred. So it really was at a discount. And so those early investors probably took some profits along the way when it started trading above 90, above 95, above 99. There was probably a lot of profit taking, and now this is probably slowly but surely over. And if interest keeps rising in this preferred, then they'll finally be able to issue more.
Yeah. We'll see on Monday what's the ATM looking like.
All right. Should we move to the next company with Metaplanet and some updates here on the short interest?
Yeah, so just to give a quick update on the short interest. So this is a chart that we took from Mark Riemer. So since September, we see that the short interest has continued to grind up. So going from more or less 10% to 20% as a reported short interest, but the total estimate is far above that, which, to be honest, I'm a bit surprised about, considering that the price action of Metaplanet is down in the gutters, and shorts keep piling on. So yeah, interesting to see this.
Yeah, it just shows that the pressure is being kept on Metaplanet, and as you're saying, the performance over the last months continues to be very bad. They're trying to react now with different instruments. We did mention earlier the possibility that they opened up with a 500 million loan that they could take on to buy more Bitcoin, but also to purchase back their shares, if that would make sense. And it looks like they did act on it, at least partially, now with a 100 million credit that they took on.
Yeah, so they took now a loan of 100 million. This one will be backed by their Bitcoin, so it's collateralized by their entirety of their 30,000 plus Bitcoin. And we'll see how much they manage to acquire, considering the Bitcoin price is down also in the gutters. So probably also a good idea to do that. Initially, I wasn't so happy to know that they would take collateralized loan, because we've seen from history, especially with the strategy during the 2022 bear market, where they got quite close to getting liquidated back then when they had those collateralized loans. But the fact that they're taking a 100 million loan collateralized by 3.5 billion, I think it's well over collateralized. So in that aspect, I'm okay with it. So let's see what Metaplanet comes up over the next few weeks. We've been expecting also that they announce a bit more about what's going on with their preferred shares, which we haven't heard much about lately. We also haven't heard about Project Nova. Dylan and Simon have been quiet right now. I don't really know why. If there was a blackout period, it's been quite long now, because I think it's been over 1 month. We haven't heard much from Metaplanet. So speaking of preferred shares, Strive beat Metaplanet to the punch by issuing their own preferred share, SATA. It's an STRC-like product. We can share some details and how it differs from Stretch. So their initial issuance was supposed to be 125 million worth of shares, and they ended up upsizing this to 160 million. So not bad. And they will also be selling those shares at $80 per share. How does SATA differ from STRC? So here we show a full table with all the features from STRE and SATA. So one of the main differences is the current annual dividend rate. Currently, STRE is has a dividend rate of 10.5%, whereas SATA will start with a 12%. And the second big difference between STRE and SATA, I would say, is the target price range. So STRE should trade between 99 and 100, whereas SATA will be trading between 95 and 105. So I think that's actually a really good thing that they did. And I had a discussion about this product with Tyler in the previous episode. And I have to agree with him that maybe strategy hindered themselves a little bit by having such a low trading range. Whereas now with SATA, having a wider trading range helps them a little bit more to be more flexible with the product. So yeah, definitely a nice change or a nice differentiation here.
Yeah, I think this shows that there is room for multiple different Bitcoin treasury companies, because we're seeing another company now releasing a product that is quite similar to Stretch, but it has its differences, and they're trying to be attractive to the market by having a higher dividend rate, for example. But also this trading range is interesting. I think as you say, it gives them more flexibility to issue additional shares, but I think it's also because the liquidity is not as deep as with the Stretch, right? The Stretch was a 2.5 billion initial offering, so there's quite a lot of liquidity out there, and the volatility therefore should be a bit lower. And with SATA, probably with less shares outstanding, they also have to widen the range because the volatility will probably be higher on this instrument in general.
Yeah, and maybe one thing that isn't mentioned here on the table is that the dividends for the next year are already in the balance sheet of Strive. Unlike Stretch or unlike Strategy, which doesn't hold a lot of cash on their balance sheet for the dividends, and on the contrary, they actually issue MSTR shares to have this return on capital tax preference. So there you can see also some nuances in terms of the strategy, not just specifically on the instrument, but also on the wider company.
Yeah, I think that's an important point. It de-risks the product significantly too, right? But by having they have the cash available for the next 12 months dividend payments.
It's good to see quite a bit of differentiation, and again, that's why I'm curious to see also what the other companies come up with in terms of products.
Yeah, so interesting to see. For me, it was also surprising to see how fast Strive continues to move. Again, we've seen the first merger by them. We see the first preferreds outside of strategy issued by them. So the team is really moving fast. So one of the most promising treasury companies in my view here.
Strive has been executing quite impressively. Yeah, let's hope that this continues, because there's still this overhang from the pipe deal, right? Which still kind of looms on some of the companies, and Strive included.
Yeah, let's see if they can get out of this hole. I think that the psychological barrier is at around 150, and they're trading close to that range. So let's see if they manage to get out and back up again. It will be an interesting one to follow, and it's been quite strong in contrast to the other treasury companies over the last few weeks. At least it's had a nice recovery and is maintaining that recovery compared to a Metaplanet, for example. So on the contrary, we have another company to talk about today that did not execute very well, in our opinion, with Sequans. They did announce now that they sold part of their Bitcoin to pay back some loans.
So they sold 970 Bitcoin to redeem 50% of their convertible bonds. This marks the first large Bitcoin treasury to sell some Bitcoin out in the market. Yeah, I think this just shows that it's not a clear path to riches to just get a Bitcoin treasury strategy going. You need to do it in a orderly fashion, and it goes back to the pipe deals, right? Because you look at how they executed or how they implemented their strategy to begin with, trying to go too fast, too quick with the pipe, but not only the pipe, but the convertible bond. So you have two factors that were just creating way too much pressure on the stock price, I believe.
Yeah, and it's also unexpected for me to see them repaying a convertible bond with that. We've discussed in the past, what should a Bitcoin treasury company do? Could they potentially sell Bitcoin to buy back their stock if they're trading below NAV, right? And here it's not even that's happening. So they're not even supporting their stock price with their move. They're deleveraging basically, and it's an interesting one. It's not even to support the share price in the end. And let's see how this one turns out.
I think they've dug themselves in a hole. In my opinion, the last thing that you should do is sell your Bitcoin. You should go to any other means to avoid that. So even if the MNAV was below 1, I believe, as Metaplanet, you take a loan to buy back your shares. Also depends on which situation you are on your balance sheet, right? Every company has a different situation. Probably Sequans is gonna have a hard time ahead. But in order not to finish on negative news, let's talk about the next and last topic is the new Bitcoin treasury company in Switzerland, Future. Finally, we got some news that they are gonna IPO soon, and that they raised 28 million Swiss francs for the company. So really looking forward to what the team at Future comes out with and what kind of strategy they will be implementing.
Yes, it's an interesting one. Switzerland has been talked about a lot by Sailor, by others. It's after Japan, it's the most interesting jurisdiction with super low yields. So it's a good one to have a Bitcoin treasury company in, and potential preferred equity as well. And let's see if strategy beats them to this product, or if they can be first.
Yeah, Future will also have a tough time ahead, I believe, with strategy eating the world, because strategy is already in a great position to potentially come out with preferreds in Switzerland. And obviously, Future needs to build trust, to have a proven track record. And also they need to scale up, right? Because you cannot just issue preferreds without scale as well. So that's another aspect that is probably the most problematic for Future ahead. But yeah, I mean, I think they have built a really interesting team in Future. So looking forward to see how they execute ahead. So that's all we had for you today. Thanks for listening. See you all on the next one.
Bye-bye, everybody. See you next time.
How many chairs are you sitting on right now?